If a trading is a game of probabilities, your trading plan is a rule book that stacks the odds into your favor. Trading without a plan is not a trading; it's basically high-stake gambling. It's like building a house with no blueprint. The whole building or the whole thing is destined to collapse. Most new traders operate on a gut feeling, hype, or fear of missing out. Trading system is your call it personal non-negotiable business plan. It sets the rules, it sets your rules that you develop, tested, and trust, and remove the emotional guesswork from your decision making. Your system needs to be clearly defined. And you can define it by three things: your entry criteria, your exit criteria, or stop loss, or the exit criteria for taking the profit. What exactly objective condition must be met to enter a trade? At what price you will admit that the things go south and wrong, and you cut your losses, and where will you take the profit? So the rules make these three rules, or this couple of call it this rule should be crystal clear. There's a zero room for the debate in your head at any given moment when the market is flying. You don't have time to think. You need the time to act. You only have time to execute. Your plan ensures you react with discipline. No fear or greed. The mathematical approach separating amateurs from pros. The amateurs ask what's the market is doing next. The professional asks, does the market meet my rules right now? If yes, they execute. If not, they're doing absolutely nothing. So we get the why. Thinking the probabilities are used in the system. Now for the how, the first pillar of a solid system is speculation. New traders drawn into information, cuddling their chart with a dozen of indicators, which leads to analysis paralysis. Your goal is to be a specialist, not a generalist. Pick one or two simple call it repeatable patterns and become absolute master of identifying them. Let's talk about two of the most timeless setups. First, trade with the trend. You heard many times before, the trend is your friend, and it is a clinch because it's true. It's much far easier to make money swimming with the current than finding it. Find the main trend on the higher time frame, as we did many times before. We're going on a day. If you're a day trader, you're going to the day interval. You see where the trend goes. Of course, if it's go up, your favorite position of the day will be long. If it's going downwards, so it's going to be vice versa. You're going to obviously favor the short position. And you don't basically buy in the top or when you are in the supply area, and you don't buy when you're short the market when you're in demand area. You're waiting for the dip in the key areas, and then only then you enter. Second, use support and resistance if you're doing stocks trading or supply and demand. Of course, as we many times mentioned this before, supply is basically where the market makers are dropping their merch, and the demand is where they are releasing it. Of course, in this opportunity, you're just gonna wait for the price, ambush the price to get to those keys area, and when you're in a support, you're gonna either short the market to do nothing